Right, joining us now to discuss BTC price and more is CoinDesk markets analyst Damanick Dantes in New York. You know him, we love him. Welcome, Damanick. Thanks for joining us. So, what's your outlook on BTC? Are the Luna Foundation Guard BTC reserve purchases priced in the markets right now, or we have further more to go? Or what's going on?
Yeah, definitely we saw some of that impact. Starting off the week, we had about a 6% price jump in Bitcoin, and the equity markets were kind of flat. So everyone was wondering, what's going on? Is this just a risk-on sentiment? But it appeared that it was definitely some sort of crypto-specific move. And I think that was from the Luna Foundation, purchase of the Bitcoin. It's now around, I think you saw the chart earlier, it was on 30K BTC worth about 1.5 billion. It's a pretty large move, but these are done in steps. So it's really hard to capture that even in the volume data. I don't know how they're executing that on their behalf, but it's a big vote of confidence from Luna. I don't know what they're trying to do with the stable coin matching, but the price will have to be elevated to sort of realize some of the gains and not suffer extreme drawdowns, because that can really hurt.
And it's generating a lot of excitement in the crypto community. So what are BTC trading volumes like? You can essentially front run the Luna Foundation Guard right now if you wanted to. Are people taking the risk?
I don't know. That's something I have a lot of questions about. We talked about that on the market call this morning. So I don't want to speak too much about that. But we are seeing that the volume data has been tepid. And, over the past week, open interest was rising, which is pretty good. We haven't seen that in a while. In the perpetual futures, the swaps market, we're seeing a slight uptick in the funding rates, which is good. That reflects some bullish sentiment. But it's still about a 1 week high. So we're not really seeing any strong conviction there. And volume just tends to just drift down, and also volatility has been sold off. We kind of had the volatility spike earlier this month, and it tends to sell off towards the back half of the month when options expire. There's a lot more technical behind that, but most traders are expecting volatility to pick up. Volatility, once it gets cheap, people tend to expect prices to either have sharp price moves going forward, and of course that can be on the upside or downside. But right now, the risks are pretty much balanced towards, less of a chance of a major sell-off and just more of either range-bound to top-side predictions.
All right. In terms of taking risk and trading on sentiment, you're seeing some BTC correlation to meme stocks. Tell us what the significance is of that.
Yeah, so Bitcoin has definitely been a leading indicator for investor risk sentiment. Typically you go to the high speculative areas on the market where investors are more willing to take on high risk bets to provide a leading signal of sorts. So the crypto markets, for equity traders at least, has been a good eye for that. And we've been seeing that as of recent. So right now, when things started to stabilize earlier this month, Bitcoin, had that slight drop or slight pickup ahead of the equity market. And you can see here the correlation between Bitcoin and meme stocks, of course, over 30 days, so a much shorter time period, is rapidly accelerated and it's towards the highs that we last saw in 2020. And some of the meme stocks like GameStop and AMC tend to move or breaking out a little bit earlier than Bitcoin, but then you just saw them trading almost hand in hand. And again, that's a speculative nature of the asset. Tends to move just like the higher risk stocks, and you're definitely seeing that here. And also the Bitcoin related stocks like the miners and sorts are broken out pretty early. So that's a leading signal for the Bitcoin market as well. So these are all things that, traders are looking at in terms of how they're positioning and what's leading and lagging. It's definitely that interrelationship between these markets.
What about the BTC year-over-year returns? They flipped negative. What does that indicator tell us?
Yeah, so we're pretty much flat year to date. I think we had a few days where it's been positive. Year over year, it's still pretty negative, and that's because of the price crashes that we've seen. The drawdowns have been extreme, but typically when you get sort of negative year over year performance, it kind of signals that the bottom is coming near. And this chart is from Delphi Digital. The only caveat here is that negative returns can persist for quite some time. So the previous troughs that you saw in 2018 and 2014, and of course back in 2012, you kind of had a few months of just either stabilization or whipsaws that can occur. Towards the end of a bear market, price action can be pretty extreme as traders try to reconcile a fair price. And then moving off of that fair price is when you really start to see a trend develop. And right now, we've been in this long range over the past year, elevated range, albeit. So these returns and picking a price bottom is very, very difficult, but you definitely want to see some confirmation before you make any type of judgment call on a renewed bullish trend.
Okay, let's zero in on the weekly chart. Where do you pinpoint BTC support and resistance in the short term?
So this weekly chart shows a longer term price direction, and the lower indicator shows the MACD, which stands for the moving average convergence divergence. It's basically a momentum indicator that matches up the price action relative to previous price moves. And that basically has flipped positive for the first time since August of last year. And that, of course, preceded that strong up move from the July lows up to the November peak. So again, this is that long, wide range that I've been showing. And their next resistance level is around 50.9, right around 51K. And that's a 50% retracement of the prior down move. Very similar to where the price kind of stalled out in September of last year, halfway through that move. So almost symmetrical. So the trading is very much similar. The only caveat, again, here is that the prior up move, we didn't have a negative momentum reading on the MACD on the monthly chart. So it showed that the speed of that prior uptrend from 2020 was still pretty much intact. But since the November peak kind of stalled out in line with the April peak, that definitely slowed the overall long-term momentum. So that's a distribution pattern rather than an accumulation pattern. And that kind of just tells me that the upside is limited going forward, and it might just stall a break to new highs this year. So we're watching that. I'm watching that very closely and looking at the signals, of course. And I have more quantitative metrics that just measure the price action over time. And that's not near an exhaustion point yet. So we might get a few weeks of additional buying pressure. But over the short term, I'm seeing about 1 day away from an exhaustion signal. And that's just a counter trend sell signal that might indicate some profit taking from the bulls. A slight pullback of sorts, but within the context of a recovery.